25th. We are going to do a little bit of a pre-show here for people who are newer to trading or to our group. And then we will get into the regular show right at 10 o'clock Eastern time, about 10 minutes. So for those that are either new to trading or just new to being around Opening Playbook or this group, welcome to Opening Playbook. Opening Playbook is a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights, timely analysis of what's moving the markets right now, trading education. We help you build real skills beyond surface level tips and tricks, and we give live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. And the stars of the show are Nathan and Graham. Nate Tucci has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of The Income Machine, Overnight Options, and more. And he's a husband, dad of 7, and the publisher here at the pub. Graham Linman is an options expert with over a decade of market experience as well. He studied technical analysis under 2 of the top minds in finance. He developed the infamous wrap order option trades for cost-effective entries and created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. A lot of people in the stock market education industry will tell you that trading is easy if you just follow their quote-unquote secrets. Well, that's not us. We will give you the hard truth, which is that trading is complex and takes time to learn. However, we can make the learning process much easier for you. We are here because a lot of traders have trouble succeeding because they believe many of those myths that are out there about the market and trading. We'll dispel those myths for you and equip you to become a more mature trader, giving you the opportunity to be more successful. Whether that means using our systems, tools, and strategies, or if it's just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding of the markets. It's important to remember that you should never trade with money that you can't afford to lose. Nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. Now, let's be ultra clear. Any type of trading involves losing some of your trades. It's inevitable. But controlling your risk will help keep you in the game. And we can help you learn structures and strategies to do just that. So we promise to be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And for 3 simple rules to start with: stay calm, go at your own pace. It's not a race or a contest with other traders, and ask questions freely. We are here to answer as many as we can. To help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner that I'm about to pop up on the top of the screen there. There it is. Click that link to complete our new visitor form for a free options cheat sheet, as well as allowing us to modify Opening Playbook based on the responses that we get from all of you. The options cheat sheet will look something like this. You'll be able to get it right away once you fill out that short questionnaire. Now, let me give you some tips about this webinar platform that we use, what you're viewing this on right now, so that you might be able to get more out of the presentations and the meetings by understanding the interface a bit better. So you can click the hamburger icon. Those are the 3 horizontal lines in the top left corner of the screen to shrink that green bar on the left and have a little bit more screen real estate for everything else. You can hover over the video, or if you're on a mobile device, tap the video area and click in the bottom left of the video area. You'll see a little speaker icon. That's your mute and unmute button. So if you need to mute us for a couple minutes, you can click that. If you accidentally lose sound or I should say, if you lose sound, check to see if you accidentally, tap that button and need to tap it again. Now, in the bottom right corner of the videoed area, you may see one, both, or neither of these icons. The double arrow one will make the video take up the whole screen and will hide everything else. The square inside of a square will give you picture in a picture so that you can do something else while still watching the presentation. But both of those depend on what device you're using this on and which browser. So it's not available for everybody. What I recommend you do, and this is available for everybody, is that below the video, there's this little picture of a monitor, a computer monitor. If you click that, it will make the video presentation as big as it can get without hiding the chat. So you'll still be able to use the chat and see everything that's being presented as big as possible. And then lastly, below the video area is this yellow slider that says low latency next to it. If you experience any like buffering or audio or video problems, click that little slider. It'll delay the video by just a few seconds, but it'll give the system a chance to give you a better quality audio and video. Now, we talked about chat a second ago. The whole area on the right side of the screen is for the chat. The big area in the middle vertically is where you'll read what you've posted and what everybody else has posted. At the bottom is where you can type your messages that you want to post and then hit enter or tap the green arrow to send those messages. Just note that everything in this chat area is group chat. Everybody will see it. And then at the top in the green section is the menu bar, the toolbar for the chat. The first icon that has a right pointing arrow, that will collapse the chat so that you don't see the chat. I wouldn't recommend that. The megaphone icon is where you can get to private messages, where you can private message the hosts and we can private message you. If you have a private message waiting for you, there'll be a red dot on top of that megaphone. So keep an eye on that megaphone or bullhorn, whatever you want to call it, at the top of your chat area. If you see a red dot there, click on it. It means one of the hosts has sent you a private message. And then, I'm sorry, I jumped ahead. The megaphone is for the announcements, not the private message. The megaphone is where we have the announcements. That's where we always have some helpful links in there, like how to get replays and stuff like that. And that's where we also post any trades that we take during the session. If you miss them in the chat, you can always go back to the bullhorn to find the trades that we've taken in that session. The double speech bubble is the private message. Look for the red dot there, or go there to send us a private message. And then you can click on the speech bubble with the 3 dots in it to get back to the group chat. And then lastly, this far right icon with that diagonal arrow will pop the chat out into its own window if you want to move it to a different screen so you can go full screen with the presentation. So that's it. Once again, welcome to Opening Playbook. Don't forget to complete that survey. Click that link in the banner above. It's going to go away in a minute. And if you have any questions, please hit us up in the chat. Give me a few minutes to, get to answering you, but ask away in the chat. Or if you have a private, need to have a private conversation, click on that double speech bubble icon to send me a private message. My name's David. And with that, let's get rocking and rolling with the theme song.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Wednesday, February 25th. Happy Hump Day! Hope everyone's doing well. We have a few extra people in the room today. We've got, of course, our stars of the show, Nathan and Graham are here. The Better Dave Cargo is here. And we've got Mr. Silas Peters with us as well, with the nicest haircut of the group. Sorry, Nathan. All right, how we doing?
Hello, hello.
Morning.
Doing well. Got some nice follow through here today. Two back to back days with a little bit of momentum so far. I mean, we're early, so I wouldn't count anything. Wouldn't put anything in your piggy bank yet. Although over on options it hit, which is always nice. Get that done first thing in the morning. Lot going on this week. I know we have some housekeeping. I'll let Graham touch on that in just a moment. But first, let me just get us started with kind of where we find ourselves today. Just 2 minutes to give you guys an update on that, and then we'll kind of pass the ball around here pretty quickly. So obviously got a good pump up in the market. Very tech heavy run today. Q's just crushing it right now. Mags as well. Now keep in mind, we have seen technology rip on some days where mags didn't actually rip that much with technology. It's really in the other tech sector and a lot of the Magnificent Seven lagging behind. We're seeing them participate quite well right now. And good old Bitcoin, nice risk on indicator there, actually jumping back. So I was lamenting yesterday that my trying to catch the falling knife on Bitcoin didn't look too good yesterday, but it looks great today. So there you go. One day makes the world difference. And then on our sector view, you can see exactly what I'm talking about. Very dominated by tech right now. This move up, which is different than yesterday. You know, the days might look the same, but the underneath looks very, very different right now with technology really leading the way. And then a lot of our risk off sectors actually down. And it just shows you when we talk about, hey, it's going to be hard for the market to really get rolling without technology participating. This is what we're talking about. We have a really nice bullish day in the market so far. The SPY's up, 0.6%, Q's up over 1%, and yet we have basic materials down. XLU down over 1%, staples down over 1%, energy down over 1%, industrials down, real estate down. But none of it really matters because technology is ripping and it's lifting everything up. I do think we'll get some other participation with industrials and energy and things like that. I don't think the one day flush means a whole lot, but it just shows you how important that technology sector is going to be to actually get us some momentum and get us over the hump. And then here you can see on our heat map, really nice day so far. We're actually getting some financials showing up here, which is nice. Haven't seen them really move the needle for us a whole lot, but then just so much technology there on the top. AMAT's up there, Micron's up there, ANET's up there, Oracle's up there, ARM's up there, Broadcom's up there, Palantir's up there, and so on. So just getting a lot of those tech names really ripping today and moving us up. So hopefully, maybe we can actually get some follow through enough to get us out of the brutal sideways chop we've been in now for what? Let's see, entered this range November 25th. It is February 25th. So I'm not a math major, but that's 3 months of being stuck in this sideways chop here, and maybe we'll get enough momentum to pull us out of it here if we can get that technology side of things really ripping along. By the way, one note on the technology front here. Let me just show you this real quick, and then I'll shut up for a second. Um, so this is XLK. So this is technology, and it doesn't look real pretty as the SPY has been totally sideways. Technology again, XLK. If you guys want to look at technology, has been more of a negative downward structure, and I think people have thought, yeah, the AI is just not moving the needle like it was. We're kind of getting a fall off and a rotation out of that. I would argue that's actually not true. It's just that we have XLK technology weighted with some of the old school tech that is not doing as well. When you actually look at SMH during this whole time, it looks like this. So just keep in mind, chips and kind of the AI leads are actually still crushing it, even with technology looking pretty lazy. And you could even get more extreme. You can compare it to like XSW, which is like the software side of things, and see the deviation between the software side of things and the chip side of things. It's pretty ridiculous. But yeah, just worth noting, chips, AI, all of that still actually ripping throughout the first couple of months. It's just that technology as a whole is getting weighed down by some of the other kind of old school tech, the software side that doesn't look so good. So anyway, that's my spiel. Sorry, Graham, I went seven
Oh,
more
you're
minutes
good.
than I
You're good.
anticipated.
The good news is we should have a pretty quiet day in tech, especially after the bell. Not
Yeah,
a
yeah,
lot, not a lot going on.
not a lot going on today.
I've got my Go Green Nvidia shirt on today, rooting for the markets. Even if Nvidia, again, I don't even necessarily expect Nvidia to have one of those crazy pops like it did in the past, but I'm hoping they remain bullish with positive outlooks and it can lift the rest of the tech sector and ease a lot of these fears right now. Now, Dave's going to get into, not Mount, Dave Cargo is going to get into a couple of these stocks that'll probably benefit the most if Nvidia holds up on their earnings. But first, before we do that, I do want to just go ahead and one more time here talk about the Lotto board, the most recent updates we've been making to it. Again, if you're a Diamond member, you should have access to this already in your Diamond membership area. Now, here's what the S&P 500. I started trading it on January 8th. These Lotto board picks. Here's the S&P 500 since then. It's gained about 70 cents. Up, down, up, down, up, down, up, down, up, down. It's been horrible, horrible for a lot of swing traders out there. Meanwhile, and I was pretty shocked by this. You guys know this. I've said this a few times. I was expecting a 50, 60% hit rate on these lotto board trades in a market like this that we've seen with a lot of chop and no direction. I probably would have lowered that revised that expectation even lower. But so far on the lotto board live closed trades, again, far better than I expected. 70.9% win rate here on over 50 closed trades so far. Profit factor near 10, which is absurd. Even if this was at 5, I would be so fired up about it. And then again, the profit on $500 starting out. No compounding, no rolling of the gains, nothing like that. Winners and losers combined $38,000 with an average winner over 200%. So safe to say I'm pretty fired up about this. Now we do have the first ever live reveal coming up Saturday morning, 11 a.m. Dave posted that link in the chat. Make sure you're signed up, guys. Make sure you're signed up and you're good to go Saturday at 11. I am hoping, a little sneak peek, I am hoping that the team feels confident enough that maybe we could even roll it out, do a little special early access on Friday morning. So mark down Friday too, just as potentially nothing concrete yet, but definitely going to be rocking and rolling on Saturday. Now again, here's what the lotto board looks like. I'm just going to breeze through this real quick. Each day, it pulls up the top 3 bullish picks, top 3 bearish picks. What it's looking for is stocks that are currently moving at a faster pace than the market makers have priced in, which means the options are trading for less than they really should be, and our payouts are abnormally large compared to normal. So you can see right here 3 picks. It gives you 3 categories. The 2x pick, which is going to be 100% to 200% ROI. 3x pick, obviously up to 300%, and then the lotto pick. This is your full moonshot action here. Now, if you guys have been paying attention, you may notice something looks a little bit different here than in the past. These 2 readings right here. So these are 2 proprietary momentum filters that I added in to make sure that the lotto picks that make it on the top plays are already moving in our direction. They're swimming with the tide. They're heading towards those strikes versus in the past, last week we might have pulled one up and it might have been a stock looking like it was headed lower, which is not one I really want to trade. So we added in this extra filter. So each of these stocks, when you pull them up, you should see charts moving in the direction. Also, you'll notice, let me see what happens here. You'll notice, let me scroll down. Here we go. This yellow line here gives you a target as well. It takes the current volatility of the stock, looking back 20 days, mapping out the net candlestick movement of each of those days, then looks how many days until expiration, in this case 51, and it says, okay, based on the current trend, based on the current trajectory of the stock, where could it realistically end up here in 51 days? Sets a target for us so we know where to exit. That's all new here in the lotto board. So again, not only are we going to get entries where the options are trading for cheap with the return potential abnormally large, but it's going to be trading in the direction we want with an exit target as well. Now, what's really, really cool, Nate, and I don't want to take too much time up here, but I did add in, because yesterday we were looking at some stocks that didn't necessarily meet our filters. They didn't have the move that we wanted. So in this case, like here's Google. The market makers are pricing at a 4% move. Meanwhile, it's moving at a 3.98% pace. So pretty much what the market makers are priced in. But if we see an exceptional pattern, we can override these rules here with the search bar, which again, you guys will get access to, where it's going to pull up all the lottos for Google, in this case, both bullish and bearish. So if you have another strategy where things line up and you want to go for an outsized return, it will flag those too. So of course, on the lotto board, it's going to be the ones that line up with all of our rules meeting. But on the search bar, it's going to open it up for all sorts of opportunities. Anything you can imagine, like if you were typing a stock into Google, it's going to pop up all of them for you guys. So very, very excited about this. This is going to be one of a kind. I firmly believe this is the most powerful tool I've ever built, and very excited about Saturday. So make sure you guys are there.
Yeah, I'm obviously excited too. When you first rolled it out, it was cool and I was excited. Thought it, interesting idea and all of that. But now that we've traded it, it's like a completely different level of excitement. So can't wait for that. A couple of people said Friday would be better for them. We're going to try to see what we can do there as we get to the end here. Let me know. Give us a yes in the chat if you think we should really push for trying to get a Friday around the opening playbook time for all of you guys. That would make a meaningful difference for you versus being able to show up on a Saturday. Just put a yes in the chat and we'll see, see what we can, how much demand we have for that and what we can do.
Real quick for Debbie and for anybody else who is trying to find it, if you are a Diamond member and you're looking for the lotto board to get it now because you have it already, it doesn't have its own tile in the members area. You have to go to Graham's Diamond Club, and it's a tile in the Diamond Club. It's not its own program on the member site. So just go to Graham Diamond Club and scroll down a little.
Cool.
Oh, wow, we got a ton of people asking for Friday.
If we the reason I'm pushing for Friday is because if we can do it Friday morning, you guys will have access to the lotto board, so you can actually enter trades that day versus having to wait the whole weekend. So that could be pretty cool too.
Graham, that was a profit factor of 9.
Yeah.
Did I see that right? Like, what?
Yeah.
How many trades?
Somebody
Again,
asked me the other day, and I said, I know you're not going to believe it when I type it, but it's really 9 points.
Like, I saw the first few and I'm like, oh, he's getting lucky. But this is over how many trades? Like 50?
We're closing in on 60 here pretty soon. 60 trades again. the
Oh my
numbers,
gosh.
they were far better than my expectations. I tried to be very, very straightforward with you guys that these are lotto style picks, which means we are going for a lot of upside, which means our win rate should be lower, but the winners will be so big it doesn't matter. Again, 70% win rate so far while the S&P has looked like this. I'm blown away. You can see obviously why it's become my new favorite way to trade right now. Markets, so painful. This has been electric. So we'll
That's
talk more
wild, man.
about this.
135% average return. I mean, that's all you need right there. There's the numbers.
Yeah.
My goodness.
Yeah.
Wow.
Hey, speaking of, let me ask one more question, by the way, for you guys. I'm sorry, I'm supposed to be handing this off. I will. 2 seconds, Dave and Silas. I promise.
Unbelievable
I
attention.
can't shut up. I know. Just one more question. I'm curious about. Give me a let's do it like this. Give me a ranking 1 to 10 for everyone in the chat. I should see 452 responses. 1 to 10. How consistent are you with your risk management, risking the amount that you think you should risk in your account per trade? 10 being you're amazing, you're always consistent, you do exactly as you think you should. 1, totally random, half the time you don't even know why you risked 8 contracts today and 3 the next day. Give me your ranking. We'll see how people come in here.
Mike, very specific.
Mike gave a very specific answer. We got some high people in there. That's good. Brad and a couple others in the 9s and some 8s there from Len
Mike,
and
that
Dave.
last 6 should have been rounded up to a 7, Mike.
Yeah.
Do better.
Yeah. All right. Good. Good spins. Okay. So I would say, guys, if you ranked yourself like a 7 or lower, tomorrow's opening playbook is going to be a must attend. I'm going to walk you through. I'm going to use AI to do it. You don't have to use AI, but it'll set the framework of a little project that we can build together. We'll build it in real time on opening playbook tomorrow that will create essentially an automated way for you to say, this is the trade I'm taking. And based on the criteria that I've set up, it'll spit out how many contracts of that particular trade you should take to fit in your risk parameters. So it's a nice little project. Anyone can do it. You do need ChatGPT or Claude or Gemini to do it the way I'm going to show you. But even if you don't want to use any of those, you could still take the templates and do it yourself. But doing the AI way is pretty cool because you just literally type in a trade into the chat and it spits out how many contracts you should do based on the parameters that we set up. And I'll show you how it's very dynamic. You can rank certain strategies as more aggressive, others as less. All of that is kind of dynamically built in. So we'll do that tomorrow on opening playbook. Anyone who is not an 8 or a 9 or a 10, make sure you are there tomorrow. Other than that, we'll keep an eye on our earnings trades. I closed out one contract on lows right at the beginning, but then it faded. So I'm going to hold on the other one now because it's actually down. Wow. Lows is moving. It's actually down now. So I'll hold on to the other one for a little while and see if we can get some extra profit. And with that, I will finally shut up and turn this over to Dave and Silas.
All right. Well, Graham promised a few stock picks. So I didn't know I was giving any, but I love giving out stock picks. Let me share a couple going into NVIDIA earnings that I like. Let me share my screen real quick. I don't want to share that. Okay, so I really like the neo cloud sector right now because chips are hot. I love chips too. SMH, that's a great play, but you need something to plug those chips into. So my favorite plays right now, I really like Nebius is one of them. It's just kind of starting an early phase of
Dave,
a
I don't know if
breakout.
it's just me, but I think I'm just seeing the chat from.
Yeah. You're just showing the meeting chat in the share.
How's this? Better?
Oh, there
Yeah.
we go.
Okay,
That's
there we
better.
go.
wrong screen.
That's right.
So it's just a clean, simple breakout here. We got a breakout, a retest. A good entry would be taking out these highs right here at 109. And if NVIDIA just continues to say power is the main constraint, this stock, I fully expect to hit those 150 plus targets. I mean, this is the revenue that they just projected on their earnings call. I mean, it's just going exponential. And the way that they get this revenue is through contracts with hyperscalers. So the hyperscalers, you're hearing all this stuff of, we're spending 600 billion, 700 billion. Well, these are the companies that are getting those contracts and those dollars. So Nebius is a good one. NBIS, another neo cloud that's breaking out. Wolf looks really good here. So we got just a simple ascending triangle. This target's all the way up to like 23. And this stock has like a 30% short interest. So if this stock goes, it'll really go. They have contracts with Google and Amazon, and then Hut is also a good one. This is like the Trump's family's AI data center neo cloud stock. So this one, if it can take out the highs, that one should really go too. And then you have Cypher and Iron. Those are like the top neo cloud companies. But these charts, they don't look quite ready yet. So just keep an eye on Iron. And then Cypher. Cypher looks a little better if it can break out of this wedge here. I expect that one to go too. So these companies, the risk is it requires capital to build out these data centers, but if they're being funded by the hyperscalers and power is just becoming more and more constrained, the deals are just going to continue to get better and better for these companies. And that's when you start seeing this annual run rate of the revenue just scaling up. So we'll see what happens. I do like the chip still. SMH is great. It's probably the strongest looking chart right now. But these neo clouds I really like. And with that, I'm going to pass it over to Silas. But I was just looking, so kind of a teaser of what we're going to show you guys today. We're calling they're called alpha arrows. So Silas created this tool, and I've never seen anything as precise as this at calling market reversals. And that's saying a lot because working here at the trading pub, I have access to honestly every single piece of software and indicator that we have. And when Silas showed me these alpha arrows, I have truly never seen anything like it. And I was just pulling up the SPY from yesterday just to see like the signals we got. Like, just look at this, guys. Like these are we're going to show this to you, how it works. There's a whole divergence indicator. I'm hiding that right now because Silas is going to get into the mechanism of how it works. But just look at these arrows calling tops and bottoms. I mean, you had two here, but even still, you could have gotten out here. And this is on the 1 minute chart, and these can be used on any time frame. And honestly, they're just as accurate. So I'm not cherry picking a day. This is literally yesterday, February 24th. Called the bottom here. You could have bought a 0 day. I mean, even a small move like this, 0.1. I mean, that could be like a 25% move with a 0 day. So it's just crazy seeing how precise and accurate these arrows were. So that's why I agreed to come on today. I'm going to help Silas with the presentation after he gets through his training. But I just think this is an amazing tool that everybody needs to have in their arsenal. It's really easy to use. You just click it, you install it, and you can toggle them on and off if you have TradingView. So yeah, amazing work, Silas. Like, I haven't seen anything this precise ever, honestly.
I appreciate that. And what was Graham's strike rate, like 9 or something? His R.
That was a profit factor on the
profit
lotto
factor
board was 9.
Well, this has a 9.1 profit factor.
Oh, nice.
That's crazy.
Yeah. No, I mean, I think you did a good job, Dave. I mean, what else? Everybody can see it right there on the chart. So,
Yeah,
all
I
right.
couldn't believe
Lessons
it when I
over.
pulled
It's
it
time
up.
to go.
Like, what? All right.
all right. Cool. So I guess what I could do right now, if you guys are we guys ready to roll?
Go for
Yeah,
it.
go for it.
Yeah, okay. Just share a little bit of brief kind of general training on the mechanics of how these tops and bottoms are found and determine how you guys can do it yourself. And let me share my screen, I guess. Let's see. Yeah, okay. So all right, can you guys see the screen?
Yep.
Okay, cool. Yeah, so basically I just want to do a quick rundown here, and I'm trying not to try to get all the chats and screens everywhere, so I'm not looking all over the place. But essentially, what I like to just share with you guys a little bit about kind of some of the behind the scenes of these alpha arrows. Trust me, this is what you're going to learn. You can do this yourself. I'm going to show you a way to basically automate and simplify it. So makes your life a lot easier, makes our trading a lot more efficient, gives, to basically give you a lot of ideas and that are actionable. I mean, these are truly actionable. And what I'm going to show you is really the basis and foundation of what I do every single day, what our students do every single day. And the bottom line is, why do we use it? Because it works. It flat out works. And so, as we know, guys, there is risk in trading. We all know that past performance is not indicative of future results. You can lose money in trading. Always use risk management, have a trade plan, consult with your tax or financial advisor. Only trade with risk capital. Okay. Also, very important here is shut off all your distractions. Close your browser tabs, log out of Facebook, TikTok, put your phone on mute, whatever that is. Make sure to listen closely. You're probably here because you're looking for a reliable strategy that actually works in any and all market conditions. Today in today's markets, it's imperative that we have a strategy that can trade in both directions, that we can also trade in any asset class. So, I get a lot of questions. Does it work? Does it work in the S&P? Does it work in Bitcoin? Does it work on IBM? Does it work on Alibaba? Does it work on Dogecoin? The answer is yes to all of those, because we are trading. We're trading price. We're trading price action. So anything that you can put onto a chart, this will work. And it also works in up markets, down markets, sideways markets, and we do all this without guessing. Okay, we're basically agnostic of market bias. You can ask me what I think about any stock, future, commodity, currency, whatever, and I'll say, well, let's pull it up on a chart and we'll break it down. Okay, and I'm going to show you a pattern that actually results in high probability trend reversals, where the trend is likely to reverse, and where we can get in with the least risk and highest reward. Okay, so does everybody want to get into this? And not only are we going to learn a strategy that is low risk, high reward. I mean, I think that sounds good, but as I've already said, it works in all markets, time frames, asset classes, conditions, styles. I'm not going to sit here and teach you a strategy that only works on a 1-minute Bitcoin chart or a weekly Facebook chart or a 4-hour chart of crude oil. This is a simple and straightforward strategy. It works in any market, any condition, ranging, consolidation, contraction, expansion, low vol, high vol. I don't care if you're a tick trader, scalper, day trader, swing, or position trader. If you trade the underlying contract, call options, put options, debit spreads, credit spreads, reverse, crouching tiger, hidden dragons, I don't really care. What I'm going to show you is very, very powerful, and I'm going to prove it to you. Okay, so I think I probably answered a lot of FAQs right there, right here on the screen. All markets, all time frames, all asset classes. Okay, and whatever your style is. Now, before we continue, it's very important that we cover the process, right? Has anybody heard of Jesse Livermore? Yeah, I mean, I encourage you to read Reminiscences of a Stock Operator if you ever get the chance. It's a classic. And, going back to a question I often receive is, what do you think about the markets here? You think this stock is going there? My typical response is, I don't really know, and I don't care, okay? And it probably sounds a bit harsh. Maybe it sounds ill-informed, especially when your friends and family are asking you, but it's true. For the most part, I really don't care about the daily news that flow in and out of the market. I'm a trader that trades strategies based on probabilities. And so I forget about market assumptions. Okay. I'm only going to focus and trade with high probability strategies and what is actually in front of me, and no more predicting. And what we realize we must realize that knowing what is going on in the news and knowing how to make money consistently are really two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what you think the market is going to do tomorrow. And I realize it's kind of a difficult concept for maybe new traders to understand. Even seasoned traders or investors struggle with this. I certainly want to form my opinion as well. I mean, it's human nature. It took me a lot of years to figure this out. It doesn't pay for me to try and absorb every financial story out there or slap every indicator onto a chart. All I care about is when the markets that I am following reach key criteria. Okay, but there is one more trait, because if I allow probabilities and not talking heads to define my next move, then we really need to possess and control one more trait, and that's patience, because trades should never be forced. All right, a forced trade is not a statistically sound trade. Everybody wants to trade, but we're in this for the long game, and patience is expected. if you wish to bring in profits over the long term. Okay. And may sound boring to the aggressive crowd out there. Look, I trade all day long, but I'm more interested in the profitable trades. I'm not trying to be a short-term hero who tries to trade every scenario out there. I'm confident in the trades that consist of key criteria that are setting up, talking about extremely high probability trades. Okay. Patience is the key ingredient to the success of the strategy and really all strategies. And I can't emphasize that enough. Forcing trades is detrimental to any long-term high probability strategy. Now, what is a high probability strategy? It's one that requires patience coupled with a disciplined approach, waiting for the appropriate scenario to unfold with a high probability of success. Recognizing opportunities are made up easier than losses. So if you let a few pass by, we don't dwell on what could have been. There's always going to be more opportunities around the corner. This is a marathon, not a sprint. And then lastly, I realized that for me and probably for a lot of you guys is that the less you trade, the better your strategy will likely perform. Okay, the long term is what matters, and this is what makes this high probability strategy unique and successful. Takeaway again, is patience pays. And so, what indicators are used for these high probability strategies? What is the secret sauce? What are the ingredients? Now, I've learned to keep it simple. We're gonna, pick an indicator, pick a couple indicators, and try and stick with it and follow that. Right? Use it, understand it, and then I can't tell you how many traders I know, following Donchian channels and market profile and Gann and Bollinger Bands and fibs, and that's usually all in one chart. You can't even see the price. Well, this high probability strategy uses price action alone, plus one very common and basic and free indicator, along with a couple of pro tips to take advantage of what we call market sentiment and technical extremes. Now, a lot of you, anybody seen Jerry Maguire? Love it or hate it. It's a famous line. I can't show you the money because I don't know what you're going to do with what I'm going to teach you, but I'm going to show you the opportunity. So let's get right to it. It's called divergence, right? Wow, divergence. Who here has heard of divergence? Anybody? Anybody can you spell divergence? Divergence is basically when the price of an asset is moving in the opposite direction of a technical indicator. It could be oscillator moving contrary to other data. Okay, we use divergence to warn us that the current price trend may be weakening. In some cases, may lead to price changing direction. So basically, we've got an indicator and price action being in disagreement. You can use any relevant indicator, MACD, RSI, the list goes on and on. The indication of a reversal or a continuation, but more often reversal. So we talk about divergence. This can occur between the price of any an asset, almost any technical or fundamental indicator or data, and it's typically used by traders when the price is moving in the opposite direction of a technical indicator. And so we talk about the details here. We've got what's called positive divergence. This signals that price could be moving higher. So basically, when price is moving lower, but our technical indicator is moving higher or showing bullish signals. Negative divergence occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Now, why is this important? Like, why do we like this concept? Because it's often the earliest indication of a reversal to possibly enter. It's also used as a good sign to exit, good sign to scale into positions, and it means that we're usually buying near the bottom or selling near the top. And hint, hint, this means that our risk on our trades are very small relative to our potential reward. Now, we've got a handful of divergences. We're just going to keep it down to kind of the key ones. We've got these classic divergences, sometimes called regular, and we have bullish or bearish, right? So bullish divergence is when price action makes a flat bottom or lower low and a higher low on whatever oscillator you might be using. Bearish divergence when price action makes a flat top or higher high and lower high on that oscillator. All right. We also have what's called hidden divergence, and we also, of course, have hidden bullish and hidden bearish. Hidden bullish is when price action makes higher lows but lower lows on your oscillator. And that's normally what we'd see in an uptrend. And this is telling us that kind of the oscillator is recharging to go back up again, or the continuation of an uptrend. And then hidden bearish is when price action is making higher lows and higher highs on the oscillator. And this is what we normally see in a downtrend, okay? Telling us that, hey, we're creating space to possibly go back down and continue that downtrend. So if we look at regular bullish divergence, this is an example of regular bullish divergence. It's the most frequent. Usually consider a sign of a reversal. If price is making lower lows, but the oscillator is making higher lows, we don't need a series of lower lows. We just need one low to be lower than the previous low. And this can usually be found near bottoms. And this is a trend following type of divergence. If the price is making higher low, but the oscillator is making lower lows, this can be seen when price is in an uptrend and indicates that the price may tend to go up higher. Now, bearish, regular bearish, again, the most frequent, considered a sign of a trend reversal. If the price is making a higher high, but the oscillator is making a lower high, it can be found near tops. Here's a trend following type, price making lower highs, but the oscillator is making higher highs. This typically can be seen when price is in a downtrend and indicates that the price may continue its downtrend. Now, let's talk about identifying trend strength. We consider the following scheme here. At point one, you've got buyers believing that the trend has recovered or a new trend has begun and they want to make money. So you open long positions and drive the price higher. The trend accelerates as more and more buyers are jumping into the market. At point two, this is when buyers are starting to take profits. The trend starts to weaken. Buyers still dominate, but they calm down because they're afraid that the trend is coming to an end. And then we get to point three, which is basically when there's no more buyers in the market, the trend is going to likely reverse. Sellers start to dominate over the buyers. All right, so we can use tools to help recognize trend and trend strength. And one of those tools can be found with the popular RSI indicator. I believe the standard rule of thumb, if you will, is when price rises above, say, 70 or 80, the market's considered to be overbought. When RSI falls below 30, 20, people use it differently. The market's considered to be oversold. It's a great concept, and we'll use the RSI indicator in another way. We look at the same chart. There's two significant labels. Let me grab my little pen tool if I can. See if I can do that. So we just look at the same chart. We've got two significant highs labeled A. Well, I thought it. There we go. A and B. There we go. And the corresponding highs in the RSI window pane below. We've got A and we've got B. And so what we see here is that in the price chart, B is higher than A. That means price is still going higher. And the RSI pane below is just the opposite. B is lower than A. That means the trend is weakened and is likely going to reverse. And lo and behold, as we can see, the market actually reversed, right? Now, we've used the RSI indicator in the previous example. It can be replaced by any momentum indicator, CCI, stochastic, MACD. All these indicators are derived from price, so there's no really better or worse. It's really about preference. It doesn't matter what indicator you want to call your best friend. All these approaches are equally good, but let's go back and focus on what matters, which is the concept of divergence. So I want to recap before we go into a little bit of a deeper dive. Bullish divergence is when price is making two significant lows, but the second is lower. RSI makes two significant lows, but the second is higher. Bearish divergence, just kind of the other way around. Price makes two significant highs, but the second is higher. And RSI makes two significant highs, but the second is lower. Now, we previously defined divergence as a discrepancy between price and indicator movement, right? And now note that we've also added the MACD to the chart. So when price is making a new low, but the MACD makes a higher low, it's bullish divergence, signaling that the trend is going to reverse, and this is classic or regular divergence. The black line on the price is sloping down, but the black line on the MACD indicator is sloping up, all right? Now, the depth of divergence is a bit of a subjective term. When you look at this example, we see two divergence patterns, a bullish and a bearish. The first divergence is nice, but the second one doesn't look promising because the two peaks or troughs on the MACD are not very significant. I think we can all see that. So we consider a divergence to be deep if the MACD crosses the zero line. So this type of divergence, when we have this, it provides a much stronger signal for a trend reversal. On this chart, we see two divergence patterns. The first example is an almost double bottom, if you will. The second example has more defined peaking action. So when we peak, MACD line crosses the zero line. rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the zero line, it means that this is a higher quality divergence pattern. Now, we know, so now that we know, we all agree, we know the basics of divergence. Let's look at ways that we can approach divergence in a smart and methodical manner, okay? So these type of patterns can lead to consolidation, correction, or full trend reversals. And that's great, but we also need a definitive plan about where to enter, where to place stop losses or risk, and where to exit, right? Because with this strategy, we can make quick profits on small corrections or minor trend reversals, or try and capture major market moves. And when the trend reverses, every trader's goal is to try and stay with the trend for as long as possible. Now, we know that divergence is a very reliable pattern. Sometimes chart pattern traders might see a double top pattern. Elliott wave traders might see a shortened fifth wave instead, but they all refer to the same thing, is the divergence pattern. So basically, this is what chart pattern traders see. This is what Elliott wave traders see, and this is what we see. Most traders don't realize that something as simple as MACD or RSI divergence is exactly what you're looking for, right? This approach removes the subjectivity because the divergence pattern is well defined. So let's talk about entry. Let's look at this into even greater detail with some charts. So the strategy, the entry, right? Where or how do we enter these trades? So there's a couple of different ways we can consider entries. One, a simple enter on next candle open. So we wait for the divergence candle to close, then we enter on the next bar or candle open. Another method is to wait for the candlestick confirmation here. This is, we wait for a bearish candlestick, either an engulfing or reversal for short positions, or a bullish candlestick for long positions, right? So now we talk about the probably the least fun part of trading, but by far the most important, that's stop losses or risk management. Now, we could really kind of argue, all day about the best place to put a stop loss, but let's keep things simple and subjective. For a stop loss with this strategy, we can place just below the bullish divergence pattern or just above the bearish divergence pattern. So we see this example, we see this second turning point, or the point of divergence, can act as a minor resistance point from which price uses to retrace, and then thus we're protected from being stopped out too soon. So we've covered entry, we've covered stop losses. Now let's get to the fun part, which is profit targets, okay? Now, our first goal is to make a profit before the market turns against us, right? We don't need to shoot for the moon here, so we don't place the first profit target too far. I found that a wise place to place a profit target are just at simple areas of significant support and resistance, or what I like to call price structure. This keeps us from guessing an arbitrary amount of ticks or points. So the divergence valley that we see, we're looking to get long here. We see this divergence valley right up here, okay? This is a good place for profit taking. We have very clear price structure at these levels, and these levels often price often gravitates toward these areas like a magnet, okay? And it's no coincidence that prices have reactions at these levels. So by taking profits at these levels, we can profit from divergence patterns that result in minor trend changes or outright corrections. And we can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to those complete trend reversals, and we want to take advantage of those huge trends that can occur, which we'll cover in just a bit. Now, candlesticks, again, we're talking kind of about entries and exits. When a candlestick reversal pattern or an opposite divergence pattern appears, it can also serve as a good place to exit. These are important reversal patterns that basically are giving us a warning sign or signal that the trend can reverse. Has a good chance of reversing. We don't know, nothing's guaranteed, but at a bare minimum pause, right? So if the candle reversal pattern appears close to the first take profit level, but we weren't filled, or the objective was not reached, it means that price is about to probably reverse from that point early. So then we just simply close the first part of the position and not wait until price reaches that level. So if we look at another example here, we can see price kind of lurched up to our valley or our take profit levels, but put in a bearish reversal candle, not once, but then also twice near our take profit level, drifting then all the way back to the stop out area, right? So this is why it's a good idea to consider closing part of our position, or at a bare minimum, jacking up our stops to at least a risk-free or break-even position. Now, another great way to trade this strategy is by adding a couple moving averages. I think this right here, this green one is the 8, the red one is the 34. Okay, so this one's called the slower moving average. This is the faster moving average. And the first look at this example shows that the candlestick reversal, not a bad place to exit, right? Not a bad place to exit, but there's room for improvement. So when we add we have that 834, we were stopped from shorts by maybe a small candle correction, but then we see the trade continuing, right? So when price bounces from that slow EMA, which is the red 34, we have a chance to re-enter the market and continue to ride the trade lower into profit, stair stepping above swing highs along the way. So you've seen numerous examples of how to catch the move happening after divergences. And the most popular approach amongst traders that I've seen is they just exit at a certain number of ticks or points or pips, but most of them do it the wrong way, right? As you know, every market and every time frame have different volatility components. So it makes no sense to go for an arbitrary, 100 pips or 5 points on the here or $7 on a stock and so on, because volatility changes over time, and it changes over time for each instrument. So the best way to determine your exits is by testing the strategy. You can learn that individual market's movement or rhythm, but I found a much easier way. And so let's quickly recap some of those exit strategies that work for these setups. Structure, plain vanilla structure, valleys and dips at the significant areas of support and resistance. Candlesticks, if the candle reversal pattern appears close to the first take profit level, but we weren't filled, then close the first half of the position early. Excuse me. And we can exit the second half of the position at the moving average crossover. All right, so pretty simple. Keep it simple. Let's talk quickly about false divergences. How do we filter false divergences? We know that when traders are trying to jump in the new trend, they need some confirmation. We know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when the minor support or resistance is broken, okay? Now, if we look here, there's nothing wrong with that, but with this approach, the entry can sometimes be too far away from the start of the move, and the risk can be too high when compared to our profit. Now, our goal is to limit risk. We don't say that this entry technique is wrong, but there's a way to achieve more consistency. So where a lot of traders, where most traders are looking to enter, we're actually looking to take a quick profit. Now, I'm going to remind you guys that sometimes the MACD can look choppy, quickly reversing up and down, implying that the market is in chop zone. And this can generate a series of false divergent signals, right? So we consider this kind of, chop fest, chop zone. And we can really, see this out on the chart as well. So to prevent over trading, I'm not saying we're going to prevent false setups or prevent losing trades. That doesn't exist. But to prevent over trading, we found a way to recognize clear divergence patterns. And so our golden rule is this. It says that the signal line must be crossed by two peaks. So if we look at chart 1 on the left, do we see how the signal line crossed? This is your zero line. Do we see how the signal line crossed the zero line and came back up? You see that? And then we look at chart B on the right, there's no crossing of the zero line, okay? Now, if we go back to entries, Our goal is to enter as soon as possible after the divergence pattern has formed. So our strategy gives a signal just after we have what we call this MACD hook, or what we call the turning point. So only after the MACD hook has formed, you will recognize the second peak on the MACD histogram. And this is where we recommend entering on the next candle open. It's a very simple, very mechanical rule. Now, we further fine-tune this into an even more reliable method by using trend lines. Experience has shown that trend lines can be used as a great confirmation tool for any trading strategy, and I use trend lines to confirm these divergent signals. So when looking for a long signal, we just draw a simple trend line on the chart by connecting the minor highs, okay? And I will enter on a buy stop triggering above the trend line. When we're looking for a short signal, we're going to place a sell stop just below the trend line, and when price breaks that trend line, we're in, okay? So it's the entry is almost the same as the quick entry on the next candle open technique, but sometimes it protects us from a false MACD hook when the MACD turns again and continues to fall. So you can call it a bit discretionary, but to me, it's one of the most effective ways to enter on divergence signals. So again, we look at this example. We have a divergence signal, this time to the sell side. We just put a small little trend line onto the chart, and then we can enter either on, say, a sell stop or confirmation retest of that trend line once we get that break. So hopefully you guys are following that. So let's recap everything you guys have learned. A high probability reversal strategy, where to enter, where to place risk, where to take profits, and how to filter false setups. How do we trade it? Well, have you ever wondered why markets turn against you when you jump on a promising looking trend? The most tempting signals are usually a trap. As there are more buyers to move the market, sellers dominate. As there are no more sellers in the market, the buyers dominate. Divergence masters know how to enter in the opposite direction just before the trend turns. And this is a quote that I love: is disregard the majority opinion because it's probably wrong. Okay. Following the herd may have worked, sometimes 90s tech bubble worked until it didn't. The 2000s real estate boom worked until it didn't. Cryptomania of the 2010s, whatever scenario or regime we're in. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Yeah, 100%. So when you trade this way, it's important that your winning batting average could be sub 50%. I mean, you don't even have to be right 50% of the time, even 40% of the time, because this method just skews the risk reward scenario overwhelmingly. It's overwhelmingly skewed in your favor. But a couple additional pearls of wisdom before we wrap up here is that the less you trade, the better odds that you'll likely have over the long term. We want to filter unreliable patterns, just focus on the strongest signals, and we can use a customizable indicator that can do a lot of this heavy lifting for you. And then you just kind of you sit back and enjoy the various exit levels to whatever suits your need. Okay. But what is very powerful is when we can automate this. Now we've demonstrated that we can use this to scout for quick profits on the 1 minute chart, look for intermediate trend changes on the hourly, spot big trends on a daily time frame, any market you wish, any asset classes, whatever floats your boat. But be patient, avoid over trading, but find something that suits your trading style. Okay, it suits your trading style. How do we do all this? You say too many markets, too many time frames, don't have enough time. Well, we've developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, scrutinizing hundreds of charts, just trying to determine if what they are eyeballing is actually divergence or not. We basically crack the code, and we've simplified the process. And we do it with something that we call alpha arrows. Okay, we've been able to take everything that we just saw, code it, program it, package it up in a nice, pretty bow with what we call alpha arrows. So, you guys ready to take this next level? Hopefully, you guys learned something, some nuggets, some pearls of wisdom. You take that information, do what you want with it, manage your risk. But I think that if you guys want to stick around, I'm going to show you. We are going to take it next level. Essentially, we're going to take it up a notch here, and I'm going to show you what we've been able to do that is extremely powerful. Would that be okay with everybody?
It's
Yeah.
certainly okay with me. Got a lot of people that are interested in watching everything you just did over again because it was a really good presentation and it's new information for a lot of people. I don't think they hear about divergence too much. So, folks, I put the link for you to be able to watch a replay. It's in the chat. I pinned it to the top of the chat. If you want to grab that link, it'll be posted there later this afternoon, and you can watch that over again and take notes and all that kind of stuff. Great job, Silas. So, yeah, if you want an opportunity to have a lot of that work done for you by the tool that Silas is talking about, you definitely want to stay tuned for this part.
Yeah,
Awesome.
that's right, guys. We're going to show you how to get this on your charts today. That's what this presentation's about. The reason I'm here, I'm a trade analyst here at the Trading Pub, but I like to keep my charts clean, just simple trend lines. I use a very basic set of exponential moving averages. And when I saw the power of these alpha arrows, it was that missing piece, like the leading indicator component for me, just tipping me off before the rest of my signals would hit. So I'm really, really stoked and excited to show you guys this. So I agreed to jump on with Silas and help him through the presentation deck today. So let's get going. So as you guys know, we develop tools and strategies to the best of our ability here, but there is no guarantee of the future. There's always going to be a risk of loss. So that's why it's important to manage your risk with every trade. And past performance is, of course, not indicative of any future results. So see our terms on the homepage if you want more information.